Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update for the week of April 10th, 2023. What we're going to talk about today, the two big issues in the real estate market, interest rates and affordability, and they kind of go hand in hand as we'll talk about it. So number one is Sam Khater with Freddie Mac says turbulence in the financial markets is putting significant downward pressure on the rates, which should benefit borrowers in the short term. Plus, we're seeing the inflationary numbers come down a little bit, which will also, the interest rates will now drop a little bit. We've already seen, look at this next graph. You can basically see demand based on the rate environment. And it went all the way from when the rates went down to like 6% and they went all the way up over 7%, that the buyer demand was weak. Well, now they're down to the good category again, being down in the 6s. And we expect rates to actually go down between 5.5% and 6% as we see the inflationary numbers get better and better. And plus, like he talked about, the turbulence in the financial market drives the interest rates down. So what's happening with home prices? You know, it's funny because back a year ago when we got into this, or 8 months ago, there was all these headlines that home prices could plunge 20%. You know, and what we've seen is, yes, they did plunge, but they've come back up because of the lack of supply. So we have a situation where when you really look at it across the country, prices have maybe gone down 2 to 2.5%. Look at this Case-Shiller and FHA graphs that they're showing. You can see back January, February, March, prices went up, up. This is month over month change in home values. Then obviously through those 3 months during the summer where the interest rates jumped up and everyone just kind of backed off, you saw them go down. Now you can see January going into this year, prices have pretty much settled at basically 2% down year over year where they were. So this whole thing about, and they expected so many new homes to come on the market that basically the prices would drop 20% more. And the reason that didn't happen is because people are basically locked into their home. When you have a 3% interest rate, and now interest rates were 6 to 7%, no one was selling their home. If they had to move out of the area or relocation, that was one thing. But for the most part, if you didn't have to sell, you're not selling and giving up a 3% rate, especially when there's not a lot of inventory out there. So because of those two things, the home streets are not coming on the market. So look how much prices have fallen from their peak. This is Moody's, Freddie Mac, and Black Knight. Between 2 and 2.6%, not the 15 to 20% that everyone was thinking was going to happen. So based on that, let's look at the affordability. The affordability was at record lows, which means it was very difficult to afford a home. And we're starting to see the curve a little bit on that. As you see, each downward tick in the mortgage rates is met with increased buyer demand as many eager home shoppers take advantage of the slightly lower cost of financing a home. That was from realtor.com. Because what you have is you have a situation that three things dictate affordability. Number one is supply. Number two is interest rates, and number three are wages. Well, we're starting now as we get into the summer, seeing more inventory come on the market where inventory was very tight. We're just starting to see more homes come on the market, which should keep prices fairly steady. Number two, we're seeing the interest rates have come down, and now they're coming down a little bit more. We expect another 0.5 to 0.75% interest rate downward trend in the next month or two, and wages are at a record high. So we've turned a corner on affordability, and we're starting to see things have more affordability, and we expect even more as we get into the summer. So the affordability picture is getting much better after being at record lows. And you know, when we look at this graph, you can see the home ownership affordability year over year. Well, you can see during that last summer all the way through October, November, it had gone down up to 28%, the affordability, because interest rates jacked up. Now we're starting to see interest rates, you know, come back. And this is based off on wages too. So we're starting to see interest rates go down. Now this going into January, it went from 28% decline. Now year over year, it's only at a 16% decline over where it was a year ago. Because remember, when you go back to look at January, you know, of 21, home affordability was actually up. And then obviously went down and down and down. But it's, even though prices went up, it stayed pretty steady because rates were going down to keep up with the rise in home prices. Well, now the home prices haven't gone down as much as they expected, and interest rates shot up, so the affordability hit record lows. Well, you could see now, we've kind of turned the tide on that, and it's getting better and better. And you look at the affordability historic low, and you can see going to January 22nd, the affordability was very high because of the low interest rate. Even though prices were high, you see it going down and down and down and down. Now you can see we've kind of turned the corner on that. And so what's going on in our market? Well, what we're seeing is, it's definitely that we need more inventory, but just the last couple of weeks, we've seen more as we go into the summer. Because after the 2 weeks of spring Easter break, there are always more homes that come on the market. But this is why you want to stay tuned in the next couple of weeks, because we know more listings are going to come on the market. The key is the affordability. How many more buyers are coming out because they have better affordability? So it's the absorption rate. We know more listings are going to come on, but how many more buyers are going to jump in the market? And I anticipate there will have a lot more buyers because the affordability is getting better. You look at the graph in San Ramon, you can see inventory is still down and pendings are still up. So again, this is a situation where there's just a lack of inventory on the market. Look at Danville, inventory has gone down. Look at pending properties jump up. So for the first time for a long time, look at this, 60 pending properties and 59 active. There's actually more pendings in Danville than there are active properties. We're hoping to see a change in that as more inventory comes up, but as things get more affordable, we might get more buyers and we might be sitting there with still high prices where we're at. Blackhawk market has stayed almost the same, slight increase in pending sales. Alamo, again, more inventory, pendings have stayed probably about the same. And Dublin, you've seen Dublin, the pending properties have actually gone down a little bit and inventory is going up a little bit. Again, that's kind of standard for this time of the year. You really want to tune in because really the next couple of weeks is going to tell us where the market's going the rest of the year. We're going to see a lot more listings hit the market. Today was broker tour, and there was a ton of more listings. Well, we're going to see over the next week what the absorption rates of those are, and the week after that, the week after that. So in 2 to 3 weeks, I'll be able to really give you a pretty clear picture of what the rest of the year is going to look like as far as prices. But you can see where things have gone all the way down in the percentage of sales. We're sitting there at 104%, 97%, 101%, 98%. So where we were down to 90 to 92%, we're up now where things are selling for basically at asking or above asking. Every neighborhood's a little bit different. And so if you want more information on your particular home, reach out. Again, Joe Kehrig, the Kehrig Real Estate Team, 925-487-6838, or drop me an email, joe@kehrigteam.com, or visit our website to see a little bit more about us and the properties that we're professionally selling right now, www.kehrigteam.com. But remember, every home's different, every neighborhood's a little different. If you really want to get an idea, no obligation, just if you want to just kind of get a feel for what's happening with the prices, give me a call. Make sure you tune in the next couple of weeks, because that's probably going to give us a good sign of where the market's going to go the rest of the year. Thanks a lot. We'll see you next week.